Thank you. Good afternoon, everyone, and welcome to the conference call hosted by the management of Shilpa Medicare Ltd to discuss the first quarter performance for the period ended June 30th, 2023, and the discussion on the strategic initiatives that are underway. The management is being represented by Mr. Om Prakash Enani, Chairman of the company, Mr. Vishnukant Buttada, Managing Director, Mr. Alpesh Dalal, Chief Financial Officer. We shall have Mr. Vishnukant Buttada lead the discussion with his perspectives on the business performance and the strategic progress. He will be followed by Mr. Alpesh Dalal, who will give his views on the financial and operational highlights. After the management comments, there will be an opportunity for getting your queries answered. Before we commence, I would like to state that some of the statements made on today's call could be forward-looking in nature, and a detailed disclaimer in this regard has been captured in the conference call invitation, which is available on the Stock Exchange website. I would now like to invite Mr. Vishnukant to take this discussion forward. Thank you, and over to you, Mr. Vishnukant.
Thank you. Thank you for joining us today on the call. I will be sharing perspective of Shilpa Medicare first results 23-24. I will commence with the operating progress and combine it with the highlights of this and this strategy. I will be followed by our CFO Alpesh, who shall take forward the discussion on the financial aspect. Subsequent to our speech, we will be glad to address queries and concerns from the participants. I will commence with the key updates of the quarter. I will go by the segment-wise first. Within the API, we have completed the augmentations of our facilities to offer the peptide polymer CDMO services. These new subcategories within API represent a step up in a value creation for us, but conversely are associated with the certain gestation period. We are taking exhibit batches of the initial products of our clients in the peptide, and in response likely to translate into the firm commitment. This segment also makes the polymer, again, which are also high-end products within API, which we are making for the innovators. Our CDMO business is ramping up well to a sizable order position. We are also venturing as per the strategy into the non-oncology API. Wherever we can make an impact, timelines has been followed for the delivery of the project, which has been boosted the CDMO business, and clients are providing new contracts. During the quarter 502, two new DMFs has been filed, and to add around 231 DMFs we have filed across the geographies. Some of these APIs are oncology products that will see the expire throughout around up to 2027-28. Our focus is also on developing the API that can replace imports where these are presently coming from the outside of the country. By enhancing utilization and capabilities of our existing products, we are seeking to enhance the engagement with the existing clients for our core API, and this will show results. And all these things considered, I am confident that our API business once again will be the crown jewel of the performance. The highlights on the formulation, I will just start it. We have on oncology the new drug application for the pemetrexed injection, 1000 mg, 100, 500 and the 100 mg formulation approved by the US FDA. This was the first NDA approved in our Shilpa. The unique formulation supplied as a ready-to-use product solution, and this product approval from the third-party manufacturing side. Commercialization arrangement is in place with NEL Pharmaceutical LLC for the US market. Plan to launch under J-Code program by Q4 23-24. US market size approximately is around $735 million. We filed one nilotinib capsule, which is also filed into the Germany, and this is a centralized DCP procedure to file it. The product filed in the Europe, and expected launch of this complex product will be Q2 24. Partnered already with the two customers in the European market. and European market is approximately 418 million. And for US, the pivotal study is also ongoing. We have one more product that is called as SML-NUD07. This has also entered into the phase 3 study. We already received the CDSCO approval for this to start the phase 3 clinical study. The most important is the indication of this is NAFLD, that means non-alcoholic fatty liver disease. This we will be able to complete this study Q2 or Q3-24. This is the most common liver disease which is affecting almost all parts of the world, and the huge population pool is there for this. And this is the unmet need where they need this particular drug on this NAFLD, and we are happy to say that the phase 3 study is already started on that. Then the first partnership will into the transdermal patch. So as you know that the transdermal patch also is a very complex development, which is for the future it is required. And we have invested for the 2-3 years in this. We are happy to say that the first partnership we have done already with the European company on this, and the pivotal study we will plan in Q2, Q3. While Limasan advice already we have taken it on that, and the size of this molecule is around $240 million euros. Then we have launched the film formulation also into the US market. We are partnering with the other companies, vitamin D3, melatonin, methylcobalamin, simethicone, and green tea. These are all dietary supplements has been marketed now into the US. Then we have received on a biosimilar update. We have received the high concentration adalimumab into the India market. Hopefully we should be able to launch in this quarter. We already partnered with we are going to launch with us as a Shilpa, and one more with the big Indian company. Then we have done this recombinant albumin, already phase 1 study already initiated. As you know that NB, new biological entity status, we already received it from the authority. And this phase 1 study will be completed by December 23. Then one more molecule, aflibercept, phase 3 study, already we have received the approval from the CDSCO for the starting the study. As everybody knows that aflibercept is a very complex ophthalmic molecule, and we already completed phase 1. Now phase 3 we are starting it. Phase 3 will start by next quarter. We will start the phase 3. And this is what on the complex formulations we are doing it. We are on a crucial task to facilitate the launch of new products under the API and formulation, as these will bring us the predictable cash flow. The new segments are at a closer to give the visible contribution from the commercialization of the product and will help us in enhance our margin profile overall. As touched upon by me earlier, we are looking at rationalizing R&D expenses and monetizing our work as quickly as possible. You will see the operating cash flows from the year, which Alpesh will explain you separately. We are doing several cost-cutting measures into the R&D, including the formulation R&D, without compromising on the niche segment. With that, and on the US FDA front, the update is same as we have completed our all remediation measures, and we are waiting for the FDA to come and do the inspection. Other than US, almost all the regulatory authorities in the world has approved our facility, and we are continue to export to the other part of the world, including US, some of the shortages products. And the Unit 7, the Unit 7 Analytical Lab has cleared US FDA inspection recently with VI classification in March-April 23. This is the second US FDA inspection within 1 year. The Dabaspet Unit 6, which is MHRA approved, has been started commercialization of some of the ODF products in the nutraceutical and dietary supplements category in the US market. And we are soon we are going to launch into the ROW as well as in the European market. One product dossier ODF has been completed satisfactory review by the UK MHRA and expected to get the approval in the recent future. Commercialization of some of the products into India is ongoing, either from the Unit 4 site or the CMO site. Commercialization in the US for one more OSD product will start from the CMO side. With that, I draw to the close to my opening remarks and hand over to the CFO Alpesh to continue. Alpesh, over to you.
Thank you, sir. And good afternoon, everybody. I'll provide the financial highlights for the quarter, for the first quarter of the current financial year. So from revenue perspective, we reported a flattish quarter with revenues of 262 crores on a consolidated basis. However, we witnessed strong improvement in our profitability, backed by our focused efforts on bringing in operational efficiency and improved monetization of our investment in R&D to higher licensing fees. Consequently, our EBITDA stood at 50 crores, higher by 74% year-on-year and 23% sequentially. The improvement in EBITDA has helped us, in turning in black at PAT level as well on a consolidated basis. On the debt front, our net debt as at the end of the quarter stood at 745 crores compared to 764 crore at the end of the previous quarter, resulting in a lower net debt at about 19 crores. And a quick update on our capex that we have incurred. During the quarter, we have incurred capex of roughly around 30 crores, and of which majorly it has been in our albumin facility where we have invested roughly about 24 crores for the albumin manufacturing facility. And I also wanted to update all of you about another major development which we have completed just yesterday, where we have successfully completed issuance of NCD of 450 crores to select marquee investors on private placement basis. Now, this NCD issuance will help us, reorganize our debt portfolio in a manner that helps us spread our repayment obligation in line with our expected future cash inflows with an initial moratorium period of 27 months. So this should ease out the overall pressure that we had on our cash flow. So with that intent, this arrangement has been carried out. And, on operation front, as Vishnu was mentioning earlier, that we are prioritizing the launch of products that are ready in various segments that we spoke about. And we are also ensuring that, our overall cash flow gets restored, right? So, obviously, these are all being done on the back of efforts that we are doing to curtail our spend on R&D without really impacting any of our developmental efforts which are required for our business purpose. And we are also optimizing our working capital requirements to generate sufficient operating cash flows. So as I had indicated last time also that we had positive operating cash flow. During this quarter also we have had decent operating cash flow being generated of roughly about 70 crores that we have done. So overall, I think the business is coming back on track. And with those closing remarks, I would like to open this forum for Q&A.
Thank you very much, sir. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Thank you. We take the first question from the line of Shivan Sarvaiya, an individual investor. Please go ahead, sir.
Hello. Thank you for the opportunity. So a few questions from my end. So what is just a clarification? You said the NCDs that were raised were for a moratorium of 27 months. Did I hear that correctly? Hello?
Can you repeat your question, please? We can hear it clearly.
Hello, can you hear me?
Yeah, we can hear you. Can you please repeat your question?
Yes, sir. This is just a clarification on your opening remarks. You said the NCDs that you issued yesterday and are 450 crores. The moratorium is 27 months. Is that right?
Moratorium is 27. Yeah, moratorium is 27. That's correct.
Okay, sir. And the rate of interest here that we will be paying?
slightly higher than the normal rate, but it helps in covering up on the operational side, where we are able to get better terms on our supply prices. So overall, we will be able to more or less take care of the impact of increased costs that we may have there.
Correct. And sir, if you could quantify that rate?
I think some of these things we may not be able to immediately quantify, but we'll be able to provide you in due course.
Sure, sir. And sir, my next question is on the API business. Sir, and this pertains to slide number 20. So historically, we've been bifurcating the API business between onco, non-onco, CDMO, CRAMS, and others. So this time, the CRAMS piece does not show here. Is there a change in the way we look at the API business?
So, basically, CRAMS business is something, So, CRAMS business is something that, if you recall in the previous calls also indicated that by design we are, bringing it down. And we have now stopped doing that particular CRAMS business because that was a planned move that we had. Since there is no CRAMS business that we are doing anymore, that particular, block has been taken.
Okay. And in terms of the CDMO service, sir, could you just explain a little bit more, a bit nuanced way, what is exactly that we do here in the API piece when we say CDMO/service?
CDMO, we are doing especially for the new drug development. So some of these, like either it is into any special molecules, if we have to work for them. Some of these, we have to make the pilot batches, we have to make and give them for the phase 1 study or phase 2, phase 3 studies. These are the things particularly covered in the CDMO API.
Okay. And sir, what would be a client profile in the sense number of clients, the phase at which the molecules are currently, some color there?
Client profile. What kind of clients do you have? These are clients some of the clients are the US. Region-wise, I can tell you more is from the US, not from any other part. Some other part vary, but 75-80% is coming from the US, where such development takes more. And typically, what happens in the US, the smaller company takes up to phase 1 and or the phase 2. And then the bigger company acquires that particular brand and they take to the phase 3. This is what is happening. We have the mix of all.
Okay, fine. And sir, in terms of others, what is there in others, and why is it so volatile in the sense the quarter on quarter we see a lot of volatility in these numbers?
So I think on the other side, actually there isn't much volatility. What has happened was that in Q1 of last year, obviously this others also includes, whatever CRAMS business that we had, which is not there in this quarter. So that is one portion that results into this difference which is coming up. And the other portion in last year's Q1 that we had was that, we had done this slump sale of our business from Shilpa Medicare to Shilpa Pharma. So, goods which were on ICIS basis, we had to, do, a facilitation transaction to ensure that we were able to import the goods correctly. So, there was a sale, ICIS sale done, which was a one-time small ICIS sale done of about 16 crores, which is sitting and getting reflected here in others.
And to add this, currently we have almost 7 active MC projects ongoing currently into the CDMO. We have different clients, as I mentioned, US, Europe, some of these from Europe. So this is what I can tell you.
Okay, sir. And if one more question on the formulations part. So the license fees part of the business, could you just help understand how the license fees are on? What is this? Is this like a stable cash flow, or these are based on certain milestones? And how much of this 53 crores would be license fees and how much would be PDC?
Your voice is not clear.
Hello, am I audible?
Yeah.
Hello.
The voice is not coming very clearly.
Can you hear me now?
Sorry to interrupt, Mr. Shivam. Are you on a headset, sir?
Yes.
Sir, if you're on a headset, I would request you please switch to your headset.
Hello.
Yeah.
Hello, am I audible?
Yeah. Shivan, it's slightly better now.
Okay, sir. So my question was on the license fees stroke PDC in the formulations business. Could you explain the flow of the license fees, the way it occurs? What is the on what basis are these license fees earned, and what is PDC? And how, if you can bifurcate between license fees and PDC.
We want to how does licensing fees move? What are the different milestones that we should receive? And what is the meaning of PDC? That's all the different factors that we have. We want to understand that. PDC in the presentation, this is licensing fee together is about 53 crores. So we want to understand what do we mean by PDC? What is the development charges? Right.
So, as you probably aware, any licensing fees, once it is given or agreed, that means that they have due diligence already has been done of that particular product, and we get the initial milestone or the second milestone once we file in that country. There are several initially on signing, after verifying, and they are ascertaining that they are confident that we have enough material to license this particular product in that their region. This is the one initial requirement for doing accounting or agreeing for any milestone payment. So this is what it has been done, and if the milestone payment or the licensing fees is not a new for us. Licensing fees every quarter we are getting it. Sometimes it is little more, or sometimes if that particular milestone falls in that particular quarter, then we take into that quarter more. But this shows that the strength of our R&D and the strength of our regulatory and strength of our plant and the people, they are confident. Once they are confident on all aspects, it is not only on the product, it is not only on the regulatory, it is not only on the pivotal and the pilot data which we have generated. So these are all have been taken into the consideration, including the plant audit sometimes. So these are all safety, technical, all. Once that is done, then they will agree for the licensing fees. This is what the major, I can say about the licensing fees, and this is a regular in nature. The PDC is a product development charge, we call it. I think Alpesh can explain more on. But each of these licensing fees, whatever we are getting it, is it's a differentiated product which we are doing it for that. Like especially as I mentioned, the transdermal patch, what we got it in this particular quarter, licensing has been done. The second, the NDA approval, what we got it, that licensing milestone also has been acquired in this particular quarter. Some of the one NDA NDC molecules which we are doing it from the API to the formulation development, that also has been captured in this particular quarter. And this is the beginning. This is not the end. From here, again it starts more. Not only the licensing revenue, as well as the commercial sales also is there is a part of this letter.
Okay.
So, Vishnuji mentioned that there are different milestones, which are captured, and based on, as and when we keep achieving those milestones, we keep receiving our licensing fees. So, the licensing fees that we have received this time also is a combination where, we had signed up certain agreements in the past, where we have achieved, a new milestone and we have received that fees. In certain cases, we have, entered into new arrangement which has given us, new licensing fees and all. So it's a combination of the two, and it's a very regular feature in any formulation business in the pharma industry.
Okay. So, sir, do we expect this to sustain the 53 crores and grow from here? Like, is this a kind of a base and which we keep growing on?
On a, this is, based on this R&D pipeline, and it's a churn that happens. So, there are, as and when our newer products keep getting developed, that ends up providing, newer opportunities. So, it's a continuous process that you have.
Okay. Okay, sir. Thank you. I'll come back in the queue. Thank you.
Thank you. Thank you. Yeah.
Thank you, sir. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may press star and 1 on your touchtone telephone. We take the next question from the line of Kaustav Bubna from BMPSL Capital. Please go ahead, sir.
Yeah, hi. So, last time we spoke, Alpesh, the message was that the company strictly does not want to add more debt to its balance sheet, and then we come out with another 500 crores, 500 crores of debt raising. So I wanted to understand why this shift of strategy, and also what is our total debt now after this debt NCD issuance? And also, is it fair to assume that you have chosen to go the debt route instead of the rights issue route? Because you all had come out with a rights issue notice and then didn't get back on that, but then instead raised NCDs. So then does the rights issue stand cancelled? Okay.
So let me answer the first part first. As we have taken this NCD of 450 crore, this has been predominantly utilized to retire our existing term loans. So it is not adding on to the debt burden. Right? This was just, as I mentioned in my opening remarks as well, that this was more of a reorganization of our debt, right? So obviously there is slight increase that would happen because of the quantum that we have got, but it is still within our overall acceptable limits. Second question on the rights issue, we basically have not really, rights issue is still very much part of our strategy. Rights issue typically requires certain regulatory timelines to be completed and all. And in the meantime, we wanted to, as I mentioned earlier, reorganize our debt. So this is only towards reorganization. This is not towards increasing our debt. And rights issue again is planned with a predominant intent of deleveraging our balance sheet, and that we will do so once we have that rights issue in place.
Okay, great. Thank you so much. Thank you.
Yeah. Thanks, sir.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star 1. We take the next question from the line of Sheikh Mohammed Ayaz, an individual investor. Please go ahead, sir.
Good evening, sir. Congratulations for the excellent set of results. I just want to ask that what kind of performance we expect in the further quarters, whether this performance will continue or we can expect some bullishness in that.
That is the reason why I said that to making the predictable cash flow. I have given in opening remarks itself, mentioning that the predictable cash flow is very important for our company. We were losing for last 1 or 2 years because of this unpredictability, not because of us, but on a regulatory front from the US FDA. But now we are coming back on a track, and we fairly feel that this will definitely continue. Not only continue, it will improve.
Okay, sir. Thank you.
Yeah. Thank you.
Thank you. A reminder to all the participants, if you wish to ask a question, you may press star and 1 on your touchtone telephone. Ladies and gentlemen, if you wish to ask a question, you may please press star and 1 on your touchtone telephone. We take the next question from the line of Shivan, an individual investor. Please go ahead, sir.
So thank you for the opportunity again. Question on the albumin part. So what would be the total investments we would have done in the albumin project till date?
Total investment where you are asking?
In the albumin business, sir.
No, this is a different. No, we are doing some in the capex, some into the development. What is that?
Yes, sir, both. What would be in the capex and what would be in the development part, so the total investment?
I think we'll come back to you.
Okay. Okay, sir. And so we were supposed to, start selling recombinant human albumin as an excipient this year, sir. Is that on the card?
Yeah, definitely. It is there on the card. This year, probably what will happen, we will try to give them the excipient grade because now we are preparing the drug master file also on this. And once we try to submit the samples, getting it there in the formulation approvals and all, I think we'll start definitely this year.
Okay. So, sir, by when? And so what is the top line that you expect to be done with the excipient sales?
No, it is a very small quantity. We have currently 1,000 liters of fermenters. So I don't think we'll have any substantial sales from this excipient grade. But yes, anyhow, whether you have a longer or smaller, you need to establish yourself and get it approved vendor. That major work will be completed before our commercial facility put into the operation. Otherwise, that will take more time. Here, what we are trying to do is with the existing facility, completing the DMF, submitting the samples to the vendor customers, getting it approved in their formulation, and start the commercial supply from the bigger facility.
Okay. Okay, sir. And, sir, in terms of CDMO for the biological piece, sir, where are we currently? Are we expecting revenues to flow? If they are flowing, what would they be?
Yes, definitely the CDMO is the biggest opportunity into the biologics. We are continuing to explore this. We have some good leads are also coming into that.
Okay. Okay. Okay, sir. Okay, sir. I'll get back to you offline for the capex on the albumin part of the business. Thank you.
Sure.
Thank you, sir. A reminder to all the participants, anyone who wishes to ask a question may press star and 1. Anyone who wishes to ask a question may press star and 1. Thank you. As there are no further questions, I would now like to hand the conference over to the management for closing comments.
Great. Thanks, Seema. Basically, thanks a lot, everybody, for coming and joining the call. And, we hope to continue with the good performance that we have had this quarter. And we will keep in touch with you and keep updating you about the progress of the business that we have. Thanks a lot.
Thank you.
Thank you. Ladies and gentlemen, that concludes this conference.